Ever wonder why your order block failed? Now, order block has become so mainstream that literally anyone can call anything an order block. They see a candle and they call it a block. Anything is an order block now, and it has lost its original meaning. And to why your order block is always failing is because you've been doing it wrong all this time. Okay, so what are order blocks? It is an area where a high concentration of institutional limit orders. Imagine someone that has a lot of money and they put a lot of limit orders, like you can on Bybit, essentially the same thing, but they're kind of a bit more professional and they place a bunch of limit orders and they accumulate this at a specific price point. Because of this high concentration accumulation, that area becomes what we call an order block. It's an extremely potent area where price is going to react, perhaps significantly, by deviating and gravitating towards it. So picture this. The market is like a fire and the block serves as gasoline. Now, what happens if fire and gasoline meet? Well, of course, the fire breaks higher and more aggressively. But there's a catch here. What if that gasoline bottle is not filled with gasoline? What happens then? See, this world is not about black and white. It's not that easy to differentiate order blocks and non order blocks. Sometimes it looks like an order block, but then it's not an order block. And this is the biggest catch there is to order blocks. It is very easy to identify how order blocks look like, but knowing how to identify the real and the fake ones, which is essentially what every theory is about, every theory you learn about, there's going to be real ones and fake ones. But the order blocks is special because there's going to be a lot of fake ones. Approximately, I guess, from my experience, it's like 80% of the order blocks are fake. Okay, so you're gonna encounter a lot of these fake order blocks. It's easy to find them; anyone can find them. But the real catch here between an amateur and a professional is how do you identify a real and a fake one? How do you know what a fake one looks like? Okay, so in this video, I'm going to teach you that. I'm going to teach you how to become a better trader, how to identify better order blocks. Instead of just always falling prey to all these fake order blocks, you draw it out, you're hoping it to react, but then the price just blast through that thing that you just draw. And it's so painful to watch. You feel like, oh my god, I'm wrong this time. I'm wrong again. And it's an awful feeling, but we have to be able to accept it and move on from there. So, how to identify order block? Before we start with how to identify the real and fake ones, let's start with how to identify them in the first place. If you're a complete beginner, this is going to be the very best video for you. If you have learned a bit about order blocks but you still struggle to find the real ones, well, this video is still going to be for you. So, an order block is something that is, if you're in an uptrend or what we call a up move, if we're going up essentially, if we're going up, what we're going to see is the last white candle or the red candle before a move up. Okay, so if you know about what bull flags are, essentially we're going to have multiple candles, but the last white candle or the red candle becomes the order block. This becomes the order block. As simple as that, how we draw our order blocks is usually we use a rectangle tool and we just draw it out. This is what we call an order block. Now, vice versa, if we're in a downtrend, when we're going up, essentially what we call a retracement, the last green candle is what we call an order block. So the entire zone here becomes an order block. So whenever the price visits it back in the future, we expect a move down. Okay? So that is the general rule on what we identify order blocks as. Okay? Now there are still many catches to this, there are still exceptions to this, but this is the very basic and fundamental thing you have to understand. This is what order blocks are. You cannot skip this part. You cannot say, I don't want to learn about the basics. This is not important. This is like the ABCs. You cannot structure a sentence without ABCs. Okay, so this is the very basic. Don't think basic means inferior. Basic means important. Okay, people often associate the word basic with inferior, but then basic literally means important. Okay, so just a recap: a move up is the last red candle before a move up, and a move down is the last green candle before a move continuing back down. Okay, clear? This is very clear. If you're still not understanding this, please replay the video again and understand this one. This once you understand this, we can move on to the next thing. Scenario number two: order block areas, or what we can call them as supply and demand pockets. There are many words to this. People use different words, but then I don't really. I'm not a big fan of words. You can call it very fancy, but in general, my type of trading is trying to simplify words, professional words into simple plain words. So instead of using one single order block, which is what we call the last red candle before a move up, remember, just look back, this is the same thing, the last red candle before move up. Now, instead, we're going to use an entire zone. Now, what qualifies as this red zone here? Can you look at this red line? What qualifies as it? Well, anything that is what we call a consolidation, which is where price consolidates. This is what we call consolidation. This is what we call consolidation. This is what we call consolidation. This qualifies as order block. Okay. Now, hundreds of order blocks are all around the charts. There are hundreds of consolidations in your chart when you open it up. So we need to know which one is real and which one is fake. Same for the downside. If you're going down, and whenever we have a consolidation, this is what we call a consolidation, okay, the green area, and this becomes an order block. So instead of using the last green candle, which is what we learned here, we're going to use the entire zone instead. A trick I use here is that I use red to represent a bearish order block, which is what we expect the price to revisit this area by going down again. Vice versa, if we're looking at this, we want to use green color to associate this with a bullish order block, and we want to expect the price to actually revisit this area and continue to go higher. Okay, so I hope this is very clear to you. Okay, if you don't understand this, you have to replay the video until you understand this part. This is the very fundamental. Okay, so now that you understand this, order blocks is same like fair value gaps. Okay, if you don't know what fair value gaps is, you should probably check out my previous video. Fair value gaps are slightly easier to understand compared to order blocks because order blocks have much more variation. Okay, so let's find some order block examples. What qualifies as an order block? Now, two rules for order block. First order block looks like that. Second order block looks like that. Tell me, which one do you think is a stronger order block? Order block 1 or order block 2? Which one do you think is a stronger order block? Now, it should be clear to you that the first order block should be stronger. Earlier, I mentioned that order blocks are an accumulation of limit orders. So if it is a doji candle, which is what we see as wicks, in future videos, we're going to talk about what wicks are. Essentially, wicks are just points of liquidity, and it's a bunch of stop loss. And this is not good for limit orders. This is not good for limit orders, and this does not qualify as a strong order block. So essentially, if you're seeing a big body and a small wick, this is considered a strong order block. A small body but a big wick, for example, something like that, is considered a bad order block. Okay. Now that you understand what an order block is, do you think this is considered a strong order block? This little white candle before a move up, do you consider this an order block? Yes, this is an order block, but is it a strong one? Can you look at how much body there is? The body is less than perhaps 30% of the entire candle, and the wick stays up to 70% of the candle. It takes up 70% of the candle. So this qualifies as a weak order block. So do we trade weak order blocks? No. When we have weak order blocks, we don't trade it. Okay, it's just a very good advice to avoid. Don't trade weak order blocks. Now, I would instead use this entire zone as my order block. And you might be crazy. You say you're crazy. How is this entire zone an order block? Well, the market is fractal. I'm not sure if you heard of this word before, but in future video, we're going to discuss exactly what fractals are. But if we go to the weekly, would you draw this candle as an order block? Yes. Now, first, how to refine this order block? We look at this candle right here, and it's very clear to us that this candle is a very poor order block. There's many wicks and little body. So we essentially minimize this area out. We don't draw it as an order block, we ignore this area. Because if price ever revisits that low, this price is going to likely just burst down below and not hold. This wick is not a strong order block. Once the price starts to revisit the wicks of these areas, the price is not going to hold the price. So it's not going to be worth it. We're not even going to care about the wick. So essentially, we want to remove the wick as our order block. Now, the upper side is a different story now. The entire candle here is three consecutive candles. We're only going to take the body and we're only going to take this entire area. These three candles are what we call an entire order block area. Okay? So the price revisits this area, which it did, and immediately spikes up. So this is considered a strong order block. Now, if we were to go to monthly, you might not find any order blocks. So we're gonna go back to weekly then. Then we find the same scenario, but we remove the wick and we have a much more refined area. Now you can go to daily again and you can find that there is actually a much more smaller order block in this here. And this is the much more refined order block. Earlier we draw the entire zone right here, didn't we? But a much more refined zone would be this order block. Okay. Earlier I mentioned the last green candle before I move up again. Can you see this or can you see this candlestick? Okay, I'm not very good at drawing, so you might have to visualize it a little bit. So this is also considered an order block. It doesn't have to be a bull flag, and you have to see that candle, and then you go up. It doesn't have to be this entire structure. It can literally be one small candle and then continuing back up. This can be an order block, and in fact, it can be a very potent one a lot of times. Okay, does this candle have a body? Yes. Does it have a wick? Yes. Do you consider this a weak order block? Not really, because it's also considered another order block. It's called the failed to return block. Now, of course, obviously, I'm not going to um, include everything in one video. It's too much to include. But the failed to return block essentially is just one single isolated white candle or red candle or an isolated candle in the middle of a move. That is what we call a potent level. Okay. So let's look for more examples of order blocks. So immediately, I can find an order block here. Okay. This is immediately how I can find order blocks. Okay, immediately I found an order block here, and we're going to refine it as usual. I don't want the wick, I just want the body. Now, why do I want to take the wick at the top? Well, this is just a rule I do. Okay, the wick on top is essentially what we consider a strong order block. The wick on the bottom is essentially what we call a weak order block. Just a very simple rule. It's more of a memorization tactic. I find the wick above much more reliable. Okay, this is based on statistic. I've traded order blocks a lot of time. When I take the wick above as an order block, it works. But the wick below doesn't work. It's a funny thing. I can't explain it why, but it's just how it is. Okay, so did the price react to it? Yes. Now, in previous video, we learned about what we call premium and discount. Can we apply the same thing? Yes. What is this? The price is moving back to discount. We reach an order block, reach a fair value gap. Can you see the fair value gap here? If you don't know what fair value gaps are, you can check out my previous video. Okay, so fair value gaps, premium and discount and order block. Is this a good trade? Absolutely. Absolutely a phenomenal good trade. Did I take this trade? I think I did. This was a very long time. I think it was about the start of 2023. Okay, it was a very good trade, and there's actually a lot to talk about just from this structure right here. And in future videos, I'm going to talk about setups, but for now, let's stick to this video. So clearly the price reacted to this. Now, again, would you consider this an order block? Would you consider this an order block? Interesting question. No. Why? Because this doji candle has little body but many wick. If you cannot see it properly, let me just draw it out for you. This doji candle has little body. Little body. Let's just sorry. Very clearly we can see that this doji candle has little body but many wick. It's essentially a very weak order block. Did the price even react to it? Maybe just a little bit. We have a little wick touch it, and then we immediately blast right through it. Okay. So this is something that you have to understand. This is considered a strong order block. This, on the other hand, is a weak order block. Okay. So let's look for more examples of real order blocks and fake order blocks. So this is when order blocks is important. You have to apply and switch between different time frames. You don't want to stick to one time frame. My advice would be to start with the highest time frame you have, which is probably the monthly or the weekly. It's pretty much the same. I would not say there's too much of a big difference, but I would say it works. Okay, so let's go to the daily first. Let's find a zone that we want to investigate. Let's say I want to investigate this area. We saw a price reaching up here and immediately flushing back down. Now, big moves like that often is caused by order blocks. But where is the order block? Where is the order block? Where is the order block? Good question. I want you to pause the video and find it. Okay. I hope you did pause the video. So I'm going to draw out the order block for you. This entire zone is what I consider an order block. Okay. So we go to the weekly and see if we can find anything. Yes, we can. So this is why I say go to different time frames because you might find it easier to identify order blocks. Some time frames, for example, the daily might be very messy. If you go to the weekly, it might be a lot easier to spot. Now, if you are a scalper, you might not like this video because you say, "Oh, I don't like this video because it's always high time frame." Why don't you go to the 1 minute time frame? I don't, because the 1 minute time frame is unreliable. Like I said, the higher the time frame, the better the order block. The lower you go, the unreliable it gets. Okay, don't trade low time frame order block. It's not reliable, and it's it's like scalpers think the weekly is not important. You know, I'm a scalper, and I always draw order blocks on weekly and daily levels. You might say the market will take years to even reach these levels. That's wrong. The market takes days and weeks to reach this level. Don't think I'm a scalper and I don't need to care about the high time frame, especially the weekly. It's the most important time frame you have in the entire chart. Please do not say I'm a scalper so I don't care about 7 day time frames. Don't do that. It's the most important time frame. If you ignore this, you're essentially destroying your own career. I have never found someone that is successful that uses low time frame only. You're crazy essentially. Okay, so order blocks. We drew from the weekly, and I said this earlier. When we're in an uptrend, let's say we're in an uptrend, we only take the order block that has a wick above. So this entire zone is what we call an order block. The wick below is ignored. In a downtrend, the wick above is ignored, and the wick below is taken. It's like it's like this candle, for example. If I were to draw an order block, I would not take the bottom order block. I would take the wick above, but not the wick bottom, because this is moving up. Okay, I would not take this wick, this little wick. I'm not taking it, but this wick, I'm taking it because I'm going up. Vice versa, if I'm going down, I'm using this order block. I'm not taking this wick. This wick, I don't want it. This wick, I want it. Simple? Clear? Okay. So go to the weekly. I want this wick. I don't want the top wick. I have the body. Now go back to the daily. It's very clear to you that the price revisited this area. We are in a premium and discount. I'm clear that this is a premium. Okay, I don't need to draw it out and I know it's premium. It's a premium market. There's a fair value gap essentially here if you didn't notice it. Okay, if you learned my previous video, you should be able to identify the fair value gap very quickly. There's the fair value gap, there's the order block, and there's the premium and discount. Okay, take a second to digest everything I said. This is a very beautiful trade to take, and everything worked very well. Okay, and I'm not going to specify in take profits and stop loss wise because that would be very subjective. It depends on how is your average hold time. So, what is next section, right? What is the common mistakes beginner makes? Okay, so we're going to have hundreds of order blocks on our charts, and a common mistake beginner makes is they often draw out every single order block they can find. So, for example, if they find an order block here, they're going to draw it. If they find an order block here, they're going to draw it. If they find an order block here, they're going to draw it. If they find an order block here, they're going to draw it. They're going to keep drawing it. And the entire chart is going to look colorful. And that's not a good thing. That's going to be a very bad sign that you're doing it wrong. You're not doing it correctly. You might say, I feel like I can predict every single scenario, so I just draw everything. It's not going to cloud my vision. Yes, it is. Yes, it is. I used to think like you. I mean, if you think like that, I used to think like that. Many people have told me not to draw every single order block, but my entire screen looks like a bunch of, I don't know how to describe it. It looks like a country's flag. You know, a bunch of colors. Okay, there's green, there's blue, there's yellow. Okay, a bunch of different colors, and people tell me don't do it, don't do it. You know, my mentor told me don't do it. I've predicted every single outcome, but then of course all these levels will get blasted, and that's just how it is. I want you to draw out only the significant ones, the most important ones that you think is relevant. So things that are months, years ago, don't draw it out. Draw out something that you think the price will visit. For example, if I'm here, I don't need to draw out this order block here. I mean, if you want, if you can, but I won't do it. I would just draw out the order block here. This is what we call a fail to return or what we call an order block. This is what I would draw. That's all I'm going to draw out. I'm not going to draw anything else. I'm not going to draw here. I'm not going to draw here. I'm not going to draw here. I'm not going to do that. I'm just going to draw one order block here, and then we're going to do the 4 hour, and I'm going to find any fair value gaps, and I'm going to draw it out. Any fair value gaps, I'm going to draw it out, and that's all I'm going to do. Okay, I'm not going to draw 50 things on my screen. Usually 3 to 5 things are what you need. Anything more than that means you're doing it wrong. Okay, so another mistake beginner makes is they don't know how to identify fake order blocks. As mentioned earlier, I already taught you how to identify fake order blocks, which is how much body does a candle have. The less the body, the weaker the trade, the less potent the order block is. The bigger the candle, and like the more the body, the stronger the order block is. Okay. And context, please. If the order block looks very weird and appears at a weird place, don't trust it. It's as simple as that. Okay. Usually, order blocks like this is considered an order block. But order blocks at the bottom of a chart usually is weak. We don't consider these order blocks strong. In fact, they're very weak. Strong order blocks instead looks like that. This is what I consider strong order blocks. This is what I consider strong order blocks, which the price reacted to. Maybe in the future the price revisits this area and actually reacts. But if the price ever reaches here, it might react just a little bit and then continue to go down and break past this order block. Really quickly, it's just going to break past it because it's essentially useless. Okay, so I don't trust order blocks at the bottom of a chart. It's more of a context situation. Know how to use your context. And another mistake beginners make is they blindly enter trades just because of order blocks. Just because I saw an order block doesn't mean I take a trade. Okay, you have to apply a lot of different concepts. If you are watching my videos, you should be able to know we learned about 4 topics. We learned about the fair value gaps, we learned about the premium and discount, and this video we learned about the order blocks. And one of the videos we talked about RSI. So at least you should at least apply 3 strategies. You can exclude the RSI if you don't need it, but you at least have to use 3 of these theories. You have to combine all of them and see if they're all congruent. If you use the premium and discount and the market says it's not good, but the order box says it's good, well, you shouldn't be taking the trade because most of them should align. If one contradicts another, you should be careful. You should have to be able to evaluate what your trade is and what you're taking it. What risk are you taking on? The second a theory contradicts another, you're going to risk. You're going to risk higher. You have to evaluate that. But if you understand the risk and you actually accept it, then you can continue to take the trade. Okay. So final tips and trick is test the waters. Test how the order block reacts. Sometimes we often put a limit order here and we put a stop loss. Okay, stop loss is usually right below the order block and we take profit higher. And often we do something like that and we put a limit and the next day we wake up, the stop loss gets triggered. Okay, but then of course if you pick the right order block, things like that don't happen often. But if you want to be a bit more assured, you can actually test the waters. For some people that are full-time day traders and they don't spend too much time, if you have more time, okay, especially if you have more free time, you can actually put an alarm here, and if the price reaches this area, which is this order block essentially, if you can see it, you're going to put a market order. If you see the price reacting like that and you see a little move up, then you can market order. So instead of putting a limit order, which might happen overnight and blast through immediately, which you cannot predict what will happen, if you use a limit order instead, you might get blasted through. So instead, use a market order where you can actually wait for the price to revisit this area and see what happens. Okay, but of course, if you are a worker and you don't sit in the chart for a whole day, then of course, it might not be realistic. Okay. The two other tricks is, as mentioned earlier, combine other theories and use context. Okay, context is important. Don't take a trade no matter how good it looks if it's out of context. It's like how do I say this? Let's say you see a wolf in a bunch of sheeps. Does that look good to you? That's a bad sign. It's the same for charts. You see like it looks weird. It looks out of context. It doesn't look right. That weird feeling should prevent you from taking a trade. Now, I'm sorry if I'm very bad at making metaphors. Maybe it doesn't make sense, but something like that, out of context, absolutely out of context. You see a wolf among a sheep. That's wrong. That's not right. You should stop it. Okay. So strategy wise, I would say combine other strategies. In future videos, we're going to talk about what fail to return blocks are. We're going to explain some theories, liquidity concepts, smart money concepts, more smart money concepts. This is just a very bare minimum of what smart money concepts are, and we have a lot more to talk about than smart money concepts. Okay, and this is it for this video. I hope you like the video. If you like the video, perhaps you can consider taking liking the button and actually subscribing to my channel. I'm a fairly new creator, so I would appreciate any comments, suggestions, feedback, because I'm trying to grow and I'm trying to let everyone understand what I'm trying to teach. So if you think I'm speaking too weirdly, speaking too fast, too slow, just let me know in the comment section, and I'll try to switch up my teaching style. So thank you for watching. I hope you liked the video and see you in the next video.